Hi everyone, Mark here at Teslary, and Tesla closed slightly red today. $251.49 was the closing price, but that was only 43 cents lower than yesterday's close, or in percentage terms, just negative 0.17%. In the morning though, after the jobs data came out, it was much more dire, and I think it was 3.4% at kind of like the low of the day, which was around $243 a share. So by the end of the day, we rebounded over 3%. So if you're able to, kind of quote unquote buy the dip, you had three opportunities to get in around 243 as it kind of oscillated in the first hour of trading for a little bit of news came out at around 10:30 a.m. Eastern time. Now, the reason for the drop is because the jobs data that came out before the open, which was going to be the jobless claims, it was the productivity number and the labor costs number. They basically didn't come out the way we wanted to. We talked about yesterday that we kind of wanted to see the jobless number be a little bit higher than expectation, maybe by 10 to 20,000. We wanted to see labor costs come down, and we wanted to see productivity go up. Now, productivity just ticked up a little bit on the revision, but labor costs actually went up on the revision that came out this morning. And unfortunately, the jobless claims, they were lower than expectations. So just to kind of refresh your memory, if the jobless claims are lower, that means less people have less people are unemployed. That means less people are wanting to claim benefits, and it kind of counteracts that data that we were receiving last week, where we saw higher unemployment, we saw less job openings, we were seeing a little bit more continuing claims. So this is kind of a weird wrinkle in all of that, because we were figuring, and it would make sense if the jobless claims were a little bit higher than what we got. Well, unfortunately, they weren't, and the market, of course, didn't like that. And we kind of prepared some scenarios where it would be like, okay, if that, if we were to sell off, what would it look like? And we had two of those scenarios in these red lines that we drew at the end of yesterday's video. And I guess we should have kind of averaged the two red lines, and we would have had a perfect kind of guess of how the pricing would have worked out. So it was a quick sell-off in the morning, and that's usually how Tesla works. So if there's something really bad happening as far as some type of like data drop or Tesla related news that's being perceived badly, just know that the sell is going to happen, right at the open, or the sell is going to happen before the open. So it's going to be like a gap down. But if it's, and as we saw that yesterday, if it's selling off in the morning, just know that it kind of sells for a long time, and just try to familiarize yourself with the action. We can see it here on yesterday's open. It was a very dramatic decrease in price. We saw that here at the end of last week as well. So when you're trying to, if you're trading Tesla, or if you're trying to hedge your positions, just know that you kind of sometimes want to try to catch that move for a short, for a hedge. In the morning, if things are going like bad, because they're going to get progressively worse sometimes during the course of the day. Now, that was a possibility today as well, if it wasn't for one little weird piece of news that we'll get to in a couple seconds, is that you can kind of see this. So we had the gap down right in the morning, and it kind of got bought back up, but then it sold off immediately back to the lows. A little bit more buying, but a lower high, right? And once again, testing the lows. If it wasn't for a little bit of news that we'll get to, that sell would have continued. I think that would have been something that would have broken down. But the whole market kind of was buoyed just by that article. Let's just get to that now. Let's switch over to the browser and just check out Tesla related news first, and we'll get to the article in question that saved Tesla and the rest of the market. So as you can see here on Sawyer Merritt's X post, he mentions that Honda and Acura have now adopted North American charging standard, which is great. This is something that we've been expecting, because Honda has publicly stated they were in discussions with Tesla to adopt this standard. And they do share a common EV platform with GM, and GM's already been on the journey to adopting NACS for some months now. But it's good that it's official, but it wasn't going to move the stock up all that much, if at all. Sawyer also breaks some news that Hilton and Tesla have come to an agreement that they're going to be installing universal wall connectors in 2,000 hotels across North America, which would be 20,000 approximately connectors. So that's really awesome. And so if you're doing road trips, you can easily charge your Tesla or any EV essentially. But it's really good that Tesla is a part of this expansion of infrastructure and leading that expansion of charging infrastructure, because eventually it's really that, okay, maybe this doesn't affect the bottom line, right? Maybe it's a kind of a one-time revenue thing, but what we're trying to do is associate and kind of firm up the idea that EVs are Teslas, right? Like, when you think of a cell phone, you just think of an iPhone. There's no other alternative. When you think of an EV, you're not thinking about like, what are the offerings of like Ford? Like, maybe I should check out that Mach-E. Like, eventually Tesla should be like synonymous with EV vehicles and everything associated with that. So that's really good. And it's, of course, really great brand recognition, and kind of, supports the idea that your Tesla is not just something that, you need to confine yourself within your city limits, but something that could be like the vehicle that takes you across the country. Now, if you're, of course, from your perspective, like, that's obviously a no-brainer. But, if Tesla only is making up a small percentage of vehicles across America, that is obviously not a commonly held idea. And every little bit of information that other people can receive that will maybe affect their decision on what type of vehicle they purchase next, I think is really important. And range anxiety and range in general is going to be the first and most important issue. Maybe that's equal to affordability, but range is something that does need to be addressed. And as the more options there are to charge and the convenience of charging, that's going to be at the forefront of people's minds. And I think this little bit of news does help that, but of course doesn't really move the stock. But I think it's something to mention because it is kind of Tesla related and cool. Tesla Chan on X also posted something really cool, is that the Lathrop facility where they're manufacturing the Megapacks is very, very full of Megapacks. And he did a count, and he's estimating around 376 Megapacks are sitting on the lot at the factory. Now, it kind of does beg the question, like, why is this not being delivered, and why is it just sitting here? Hopefully these all have been purchased, and most likely they have, because we do know that there is a large backlog of orders, something in the range of like 2 years worth of backlog for these. And maybe it is a logistics problem. We know there are issues with logistics in America as far as freight and freight trains go. So we do know that these are very large items and not necessarily easily shipped. So it could be just a logistics thing, or something that's going to be used locally. So it's not that big of a deal to get it all, sent out immediately. But if there's 376 Megapacks, and let's look at what the approximate cost for such a pack would be. Let's just estimate that these are the 4-hour Megapacks and they want installation help. You can just kind of guess that and estimate a $2 million per unit price for each Megapack. And if there's 376 Megapacks, you're looking at maybe $700 million in revenue if they're delivered this quarter. I think they kind of do need to deliver this quarter to kind of realize that on the quarterly earnings. But energy is picking up, and we do know as well that the Shanghai Megapack factory will start manufacturing, maybe at the end of next year, perhaps. They're going to break ground on that very, very soon, maybe within 1 to 2 months. So that's really, really awesome for Tesla. And let's get to some like macro news. So let's look at the results of those the job data that was released this morning. So we can see here that 216,000 initial jobless claims were filed, meaning lower than expectations and lower than previous. The revisions to productivity and labor costs, productivity is a little bit up, but as far as expectation goes, but the unit labor costs were revised up. So there was 2 out of 3 that were really good, and it was enough to send, the stocks reeling, something like 0.5%. A couple of minutes after this information was released. So what was that little bit of information at around 10:30 a.m. that saved the market and especially Tesla? Well, Lisa Abramovich from Bloomberg says on X, another hint of how much easier it is to hire workers now than 6 months ago. Walmart essentially lowered a starting wage as some starting salaries. So Wall Street Journal broke this article, and let's go over to the article itself and see when it was released. It was today at 10:38 a.m. Eastern Time. The article title is Walmart Cut Starting Pay for Some New Hires, Revised Compensation Structure Allow for Better Staffing Throughout Stores, Retailer Says. Now, this kind of goes along with the news that we read, but something I read last month, which was from Reuters. This was an exclusive article. Walmart cuts pharmacist pay. and their hours while workload piles up. So even though there is a lot of need for pharmacists and a lot of need for pharmacist techs to be working longer hours, they just can't afford it. They're asking Walmart pharmacists to take voluntary pay cuts, and they're reducing their hours. So essentially a voluntary pay cut, and ask for that is like, please take a pay cut, or we just let you go, maybe hire someone new for cheaper. So this is a kind of a real world example of maybe the softening of the jobs market. And this is what saved the market today from being sold off. It was at a critical point. And let's go back to the charts and we can see how critical that point was. So looking at Tesla again, you can see, and we'll just circle it, this right here was 10:35 a.m. And so it was no surprise that, just off the minute time frame, it was just green candle after green candle, and it never made a significant low after that point, and it was just up from that point. So if you caught that, awesome move. But that is what saved the market. That little bit of information, because I would almost say that jobless claim numbers, non-farm payroll numbers, ADP, private payrolls, that's almost like anecdotal. Like the revisions that happen to these numbers it's almost a joke, right? They're revised, like as far as payroll numbers, they're always revised down. We know that claims are always revised up, continuing claims revised up. So it's almost like fake data, but the market can only react to what is being given. Like it's most likely going to be revised, and job numbers have been revised, I think, for like 8 months straight for the whole year. But it's just that's what we can work with at that very moment in time. And if there's a risk of another rate hike because the job market is tight, then you're not going to be in quote unquote growth stocks. You're not going to be in risk. You're going to be in cash, most likely, in maybe some short-term bills, but you're not going to be in Tesla. And it's obvious they did not want to be in Tesla given the information that we received today. We're only talking like 14,000 jobless claims as far as the difference between expectation and the reality, quote unquote, the current reality of those numbers. That was enough to sell the market off, the overall market, like 0.5% or more at the open, enough to sell Tesla down 3.4%. Like that's how skittish these people are. Their exposure is all very light already. So someone like the dip buying that's been happening on Tesla, it is disproportionate to the rest of the market. Firstly, I do want to say that, and it kind of says something. So given that little kind of like real world data that maybe there is a softening in the jobs market that we saw from data from last week, and this is real information from the largest employer in the country. I think they're still the largest employer, Walmart. They're basically saying, like, we don't have to pay you guys. We don't have to pay you guys $18 an hour anymore. Okay? Like, and pharmacists, like, great. I'm like, yeah, you have a doctorate in pharmacy. You're making like $100,000. We need you at like $95,000. Okay. And what, we're going to reduce your hours. Like, I don't even know if you're full-time anymore or how that works. But I think the real world information is what truly matters. And it allowed Tesla to recover most of its share price by the end of the day. I mean, it really recovered it by like 2:00 in the afternoon. And you can kind of see that as well. Let's go look at the S&P 500. Here's Tesla over the S&P, SPY, which is the S&P 500 ETF. And at the same exact time, 10:35, it started getting bought up because of that release of that article from the Wall Street Journal. So we all don't like, maybe we don't like the Wall Street Journal, but their breaking exclusive news was a real boon for today's trade. Now, we can kind of, like, if you're looking at this, comp, you're seeing how, the S&P 500, it bottomed out at that point and it got bought up and didn't make a significant low, but it was flat for the entirety of the day. Whereas Tesla wouldn't. Like, if Tesla was going to be flat from the moment that the S&P 500 stayed flat, like Tesla would have been at, let's see. Actually, let's go back to Tesla. If Tesla stayed flat from that moment on, we'd only be at $246 a share. It's a $5 difference between that scenario and what really happened. So there was an outperformance, and I kind of mentioned that on Twitter. I was posting on Twitter kind of like the expectation I would have had for the stock. And we can kind of go through that. So maybe if you guys, I don't do it all the time, but I really want to do it today because the action was very interesting. Let's just look at my profile. And if you guys have time during the course of the day, we can check to see if just follow me on Twitter and you can check to see if I have any updates. But so I mentioned early in the morning that if the jobs data comes in bad, most likely what's going to happen would be a sell-off and then a quick test to the bottom side of the upwards trend. We'll take a look at that when we get back to the charts. And if it rejects, it will go lower. And yeah, I mean, once the job data came out, it did sell off. And at early in the morning, we did have that first test towards the short-term trend line. It sold off from that. It tested again, sold off, went up, sold off again. And so I also said that you kind of wanted to see a base form at 242.50, but it actually formed right around 246. So it's kind of using the 245, which is tomorrow's max pain currently for options, to kind of base off of. And I mentioned towards the middle of the day that Tesla really had a nice recovery, and that early in the morning, the $250 strike price for calls that expire tomorrow were building up massively. And you're also seeing the 252.50 being bought up a lot towards the end of the day. So it was actually to the point where the 252.50 calls were surpassing the puts in volume for around the 245 and 240. So you always want to kind of watch the options chain because it kind of would determine how the price could react since we're so close to expiry. And I also mentioned we wanted to see an outperformance as far as the recovery for Tesla during the day, and we did outperform the index, so that's not too surprising. I kind of chalk it up to the fact that we had some pretty decent news in the morning, and maybe you can kind of build off of that, even though they're not really like bottom line affecting type of news, but it's kind of a sentiment thing. All right, back to the chart. So the chart is kind of messy, but also I'm going to clean some of these lines up. For now, we've talked about, let me go to a slightly larger time frame, and so just to refresh your memory, we talked about how this could be a head and shoulders and kind of at an angle with an angled neckline. Yeah, possibly, but we'll go ahead and delete that. And just, if it happens, you can say, Mark, you're right. But for now, I'm not really concerned about that. We're looking at the action, sharp sell-off, recovery to 251 was my guess, and it kind of happened. So we can get rid of that, and we can get rid of the upward scenario. So okay, just to clean up the chart. So we're still kind of respecting the levels that we've drawn out, and that have been drawn out for 2 weeks now. And so it's kind of just basing off common strikes. $5 increments is always probably going to be relevant. In this case, was actually kind of rejecting off the 252.50, which was the strike that was building up that I mentioned a couple seconds ago. It was building up for tomorrow's expiry. So most likely that might not get paid unless that was something that the street owns and not just all the retail people. But we're still within we're still kind of constrained in our estimated move range, and so maybe some maximum upside we can see tomorrow is at 255. It just depends on what type of news comes out. We had a lot of Fed speakers this week, and they were kind of affecting the price action, but not so much. They kind of all have the same message, where they kind of like what they're seeing when it comes to softening of the jobs market. And so even though we had that number today from the jobless claims, maybe it wasn't all that relevant. But what was relevant, and we'll take a look at it, was the Apple news that came out last night. And here's I just had a comparison of all the mega cap names, and you can kind of see since I would say over the past couple of weeks, Tesla here is in light blue line, kind of outperforming the rest of the mega caps, which is good. I mean, we kind of want to start seeing a divergence from these names, just because some of these names are like your typical AI names. Like NVDA is definitely underperforming Tesla, which is great because we want to separate ourselves from that. We want to be like, okay, maybe there's all this kind of FUD going out that NVIDIA is a fraud, and like we talked about yesterday, that all these orders are like for people that don't exist. Maybe people are double ordering. Who knows what's really happening? But I personally don't believe in it. But to still perform well and be, Tesla is sometimes considered an AI name when things want to sell off, right? And that's kind of been the case for the last couple of weeks. If AI selling off, Tesla sells off. But the thing about it is like, oh, if auto sells off, Tesla sells off. If tech sells off, Tesla sells off. It's like anything that happens in any sector, Tesla is going to be affected by it. It kind of does say though that that's the wide reach of the offerings that Tesla has, and that's the type of company Tesla is. It's an auto company, it's an AI company, it's a software company, what have you. But it's good that we're outperforming over the last couple of weeks. We kind of want to continue to see that, even while other names suffer. Like, Meta had a really bad day, NVDA had a bad day, and Apple had a really bad day. And it kind of performed like SPY, where, it gapped down, but it gapped down big, like, 3%. And that was after a really poor performance yesterday as well. So we're down, Apple's down like 7% within 2 days because of the news that was coming out that China was banning Apple phones from government facilities, local governments included, also state-owned companies. And so if you can't bring your phone in, you might not be willing to purchase a new iPhone. And this kind of coincides with Huawei's release of their new top of the line like flagship models. There was a chart that I saw on Twitter where it showed that Apple iPhones, of course, dominate all the high-end cell phone sales. And I don't honestly, Huawei is really just a state-owned Chinese cell phone company, really telecommunications company, and I think this is really just part of a mini trade war, or like a little bit of a tick for tack when it comes to all the sanctions that we're putting on NVIDIA and other chip manufacturers sending advanced AI chips to China. And China is trying to hurt demand for our large companies as well. So it's something you kind of have to be aware of, because it didn't really affect Tesla at the end of today. But if China is looking to hurt American companies by limiting the use of the products that they're selling in China, or however they're going to do it, Tesla needs China. I mean, not only it's not just a manufacturer, okay? It's also sells tens of thousands of cars a month to Chinese citizens, and that's kind of why there is kind of that's why following China's news is kind of relevant, because if there was any type of sanction, we all know that like from government facilities, you can't just bring your Tesla in because it has cameras and they're worried about it. You saw Elon talk about addressing the fact that they delete a lot of the data from the cameras. That's kind of like a message to the Chinese that we're not just like recording you and what have you, but they're also letting the Chinese know as of last month that they store all the data from those cameras locally within China. It doesn't get exported over to America. Kind of like that whole TikTok thing in Oracle, right? How Oracle is storing a lot of the data, the algorithm and stuff like that. It's still controlled by the Chinese. But anyways, regardless of that, there is a risk when it comes to this trade war that's going on with the communist government. So just something to be aware of. Like, I know that Elon has a decent relationship with the Chinese. He speaks highly of them all the time when he's prompted, even though maybe from large portions of this country, we wouldn't really want to see one of the most influential CEOs of America talking good about China. But it isn't. But you have to realize it doesn't hurt. We need China. We need their sales. We need their manufacturing. They make really high quality cars. But also know that Apple is a large employer through Foxconn in China. Some of the insane like factories as far as size and employment goes, basically sometimes like little miniature cities are all devoted to manufacturing Apple products. And even though they're a large employer and China has a very high unemployment rate, China's willing to risk the relationship that they have with Apple and Foxconn because of their inability to access these chips from NVIDIA, especially, along with other types of sanctions on exports from America. So that is why Apple's suffering, and it's why that the market is a little bit lower. Along with the jobs number, but it's kind of impressive though. The S&P 500 was down. Let's turn off this comparison here. So the S&P 500 is down, what, 0.3%? right? And it's up a little bit after hours. And that's with Apple being down 7% in 2 days. And the NASDAQ here is down 0.7% with Apple being down 7% in 2 days. So there is underlying these moves. There's a little bit of breadth that's happening. Apple makes up a large portion of the indices, but not just Apple. Like NVDA makes up a large portion of the indices as well and has been underperforming. And of course, S&P 500 and NASDAQ are down like 3 out of the last 4 days, it seems like. So of course it is affecting the end result, but it is not affecting it in the way you might have thought. Like if you had some of the biggest names sell off, you would think that, okay, yeah, like for the year, we know that the mega cap names are responsible for the vast majority of the returns in these indexes. So when they sell off 3-4% day after day after day, you actually can look at the performance of the indices and be like, okay, it's maybe not that bad. Like maybe there's other names that are being bought up to support this, and there kind of is. Like you're still seeing some performance in some names. It's just not. It's not the hot names that were hot for the majority of this year. But you do want to see more breadth, and you do want to see some support from the small caps and the micro caps. But there's no clarity on rates, so we might not get that. But hopefully by Wednesday of next week when CPI comes out, if we can get a really good print, I think you're going to see the seasonality play out where we get a nice rally in sometime during this month. But the overall index is actually looking pretty not so hot. I think there's a healthy correction that has occurred, and maybe this is a kind of a buyable dip, right? Maybe so. It's looking pretty oversold as far as the RSI goes on the hourly and on the daily. Kind of in the middle. But we've retraced a good amount already on the S&P 500, about 2.3% over the past couple of days. So that could be, I think if you see some bullishness tomorrow, I wouldn't be so dour with the prospects of September of 2023. Let's look at some yields. So we were talking how yields are kind of getting out of control and kind of equaling highs we saw from last year, but we had a nice move down on the 2-year, kind of retracing that really strong move that we saw not just yesterday. And so it's kind of equaled out, dropped 1.6%. The 10-year is kind of following what we thought it would do. We were anticipating maybe kind of like a head and shoulders type of look to the 10-year. And the 10-year sold off, just like the 2-year, of course. They would go hand in hand. And we anticipated that this would be kind of where it would cap off. And maybe over the course of the next, 4 or 5 days, we can see it come down closer to the 4.1% area. And that'll be really nice for Tesla and a lot of kind of growth names, especially. The long bonds they're trying to base. They didn't have as strong of a move as I was anticipating, but it is very slightly green on TLT, and so maybe the inverse head and shoulders could be playing out. We'd want to see all these gaps filled to the upside, and if that's the case, if we can get to around like 97, 98, maybe we can say we had a nice double bottom from October of last year? Yeah, October of last year. So maybe a 1-year bottoming process, not really a 1-year bottoming process, but the bottoming could be confirmed, essentially. If we can get a nice move to the upside and have a good inflation print on the middle of the month, I think I would be rather confident to say that might be it. Aside from some type of black swan credit event, that could be the bottom for TLT, maybe so. And if so, that is something that of course would be good for the markets and something that we've been anticipating to happen. The VIX had a strong move up, completely sold off into basically the negative. Yeah, it is negative. Hopefully we can fill the gaps to the downside and get our market to rally again, maybe even make new lows on the VIX by the time of the release of the CPI on next week. So let's look at the sector for autos, and you can kind of see that Tesla over the course of the last month-ish is outperforming the rest of the names. And if we kind of go to a smaller time frame, you can see how, of course, when EVs would go up, Rivian's always going to outperform Tesla. You're kind of seeing that how Rivian has more of a return, but Tesla is still definitely outperforming the rest of the names. That's your Lucids and your OEM legacy auto manufacturers. So they're not doing so great. They're still facing the possibility of a strike. To counteract that, we know that the government is providing a couple $2 billion to compensate these union workers if required. And it's not too surprising that within the last day, Ford has submitted their offer to remedy this potential strike, which was an increase in pay for their workers. I was it something like 18%. GM also responded to their demands with another offer. Both these offers were rejected by the UAW. So it's possible that more negotiations are going to be required, or if we get to the middle of next week without a deal, maybe there is a strike. It doesn't have to happen on that day, but they can start striking sometime next week, which would be, of course, great for Rivian, great for Tesla, because the workers are not unionized in the Tesla factories. So it could be good. So what about tomorrow? If we were looking at the potential for tomorrow's price action, I don't want it to be just here, but based off the options and how they evolved, it's a possibility that we might not be able to move up all too much unless there's some really, really great news that could overcome what would be the vast amount of options that are gathering on strikes that we're basically at right now. So let's look at the Max Payne site and look at this together. So to kind of, I don't have screenshots of the action but the development of the options chain from this morning. But if you can see this peak here at the 250 put strike, all three red peaks on the strikes of 245, 240, and 250, they were actually all equal around 80 to 90,000 in the morning. And the calls were just around of 250 were just above 100,000. Now we have 212,000 calls as far as the volume and calls for the 250 strike for tomorrow. And now we have the $252.50 strike with 140,000 calls, surpassing the puts of any strike. So there was a lot of bullishness that developed as the price was creeping up over the course of the day, and it was getting very severe as far as the people buying calls or just trading calls on Tesla. So you got to wonder with such a disparate amount of 250s and 252s, if we can't really get above the 252 mark tomorrow, which is it really wouldn't be too surprising. We know that Fridays are not great days for returns, and sometimes it's maybe better for trading, or sometimes it's actually maybe best not to trade unless the trade's really obvious. Like maybe today's trade was really obvious, right? Because Tesla was down 3.3%, and maybe like that's a good enough risk reward, right, for most people. So yeah, you can get a call, and it's probably a pretty cheap call with expiry just being 1 day to expiration, those options being expiring tomorrow. So sometimes you get the setups, and we talk about that a lot on Thursdays, where Thursdays are like sometimes just setups for a play for options that expire the next day. You see that a lot, and so I guess not too surprising. But with this type of interest at the 250s, on the 245s, like if you're just looking at the open interest, there's a lot at 250 to 260, and ironically 300. We're not going to see that, I don't think. But there's a lot of action going on here that maybe you're not going to get a big move tomorrow. But if you do, that's great for everyone who's long. Of course, most likely we're all long shares, right? So we're long shares. Just to remind everybody, we don't necessarily have to be super long by being long shares, buying leaps, buying weekly calls, buying monthly calls. Maybe that's not necessary. I always say just try to protect the downside, and you'll beat all the other Tesla investors that are long Tesla. So back to the chart. I'm not going to really draw any prediction of what I think the price action would be. yeah, I'm just not really interested in trading too much on Friday unless it gets down to like 245 again. I don't want it to. I don't think there's going to be the type of news, quote, I cross my fingers, hoping nothing comes out from the international markets that could really sell it off that severely again. I hope. But we've been seeing some really strong buying when it gets into these areas around 245 to 242. So let's just say if we can close around 252, like 252 and 49 cents. How about that? Let's say, and we'll draw something just for the heck of it. 252 and 49 right there, somewhere in this area. That would be a green day. It would be up like a fraction of percent. But I think as we get closer to the CPI, maybe you'll get the moves, or maybe some great Cybertruck information is going to drop tomorrow and it'll bull like crazy. I want that to happen. Who knows if it's going to happen? But anyways, thanks so much for listening, guys. And cross your fingers for a green day tomorrow. Or heck, you know what? Let's just break out. Let's go above 260 tomorrow. No, never mind. Let's try to get 250 tomorrow. And I guess I'll be happy for the short term. All right. Have a good night.